All right, guys, welcome back to this video. So in this video, I want to lay a foundation and show you the reason for my entries here on Boom 500. I entered a sniper entry there, and I also did enter another one here. What was my reason? Because it seems to me that this is something that most of us need to master. Especially as traders, we have to understand how to make some amazing entry points as boom and crash traders, or rather as synthetic indices. So right now I am on a 5-minute time frame. What was my reason for entry on this chart? Okay, so that is a very good example that I want to give on this one. All right. So because of time, let me just go straight to the point, and then I will show you why I entered that trade. Okay. So let me show you. I'll go on a 4-hour time frame. I want to show you the history behind my entry point. Right. So the first reason for my entry, as you can see, the strategy is about smart money, and it is based specifically on understanding the structures, order blocks, trends, break of structures, and also daily patterns like head and shoulders, W's, and all those things. So as you can see, the market was busy dropping, came, reached here, came again, formed this pattern. All right. This was a consolidating, all right, pattern, which afterwards the market managed to break above this mid level of supply. It broke, went and created a new high. The moment you as a professional trader see something like this, it is a time now to realize that now the market is based solely, the trend has changed, because what happens is that once the trend, all right, once the trend, or rather the shape of the market changes, what happens is that this level, which was acting as a supply, gets broken, and immediately that gets broken, we are going to have a beginning of a new trend. All right. So here the trend began going up by creating a new high, higher than this one, and also this one. So the market now came back to create a new low. In short, a new higher low. Higher, this low was higher than this one. It was a beginning of a trend. So now the market had to begin by pushing again from this level. Let me show you. From this level. So the market came, rose right from this level, and then it started pushing up. Where did it spring up? It sprang from this level of the level of order block. All right. In this order block is the one responsible. All right. This order block here is the one responsible for the push up to go up there. So the market came, bounced from that bullish order block, pushed, went up, again came, bounced there, and it went. So the structure was broken. There was a break of structure. So the moment the market pushed up, also broke this level of a bearish order block right here from the previous move, it was the break of structure. And the break of structure, it means the market has to continue. And based on what we are seeing, right, on what we are seeing on this market here, the structure is showing me that the market is still has to continue pushing and going up there. So the market must continue. So what the market did was, after the break of structure, it created a new higher high. It came back now to create a new higher low. After this higher low was created, the market now had to start going up, created a consolidation. All right. So we are looking at the chart on a 4-hour time frame. So this 4-hour time frame, let me show you now the next step that we are gonna do. So the next step, I will go on a 1-hour time frame. So on a 1-hour time frame, I am looking at the chart. And this chart that I'm looking at, I am looking at the chart that is showing me how the market moved. All right. On a 1 hour time frame, we are going to see a little bit. All right. But the reality is that after the market broke, went up, came, retested again, started pushing up, it is now at the level, at this level here, where it is consolidating, which if I take you back on a 4 hour time frame, you are going to understand that it was the same level that was acting as a supply at that bearish order block, this order block here at this side. All right. So the market has used the previous order block, which was acting as a supply, to become a swap zone by acting as a demand. And that is where the market now is made a boom by booming up, spiking up on a smaller time frame. Okay, on a smaller time frame, which is on a 30-minute time frame, also a 5-minute time frame. The market boomed right from that level, okay, because it was a level of a demand. So if I take you to the to my trading view, all right, I'll take you to my trading view implementation. This is what we are going to have on trading view implementation. All right, so let me take you. So what you're looking at right now is a trading view implementation. And on trading view implementation, we are going to do a very amazing job by me trying to help you understand the reason behind my entry points. Okay, the reason behind my entry points. So if I take a triangle, sorry about that. If I take a triangle, you will see that on a 10-minute time frame, there is this bullish order block right here. Okay, that one. So this order block, which is the last bearish candle followed by a bullish movement, is an order block known as a bullish order block. That is what made the market to start booming and bouncing here. Eventually, it was broken, of which if I go on a 15-minute time frame, there is going to be no order block. It is going to be hidden. Of course, we can see that there is one. So now, what happened here? Remember, on a 4-hour time frame, we saw that the market was busy trying to bounce back by pushing up. Please follow me. So on a 4-hour time frame, pardon me, I am waiting for this to finish loading. So on a 4-hour time frame, this is what we have. And on a 4-hour time frame, we have this level, which was acting with this bearish order block. So in this simple case, what is a bearish order block? A bearish order block is the last bullish candle followed by a bearish movement that break the structure. So this last green candle here is a bearish order block. Eventually, as the market approached here, we expected the market to start dropping. So here we can see bear boom 500 dropped, reached here. Again, the market went up, reached here, dropped. But eventually, this bearish order block we have marked with this pinkish color, it was broken by the market and the market reached here. So the moment something like that happened, we instantly have what we call the break of structure, BOS, which is in a smart money concept terms. So the market was broken. The moment the structure gets broken, we get to have what we call break of structure. And the principle here states that the market will always go where the structure has been broken, especially if you confirm it on a higher time frame. As you can see on a 4-hour time frame here, the market broke and pushed for about 12 hours if we count, or 16 hours if we count this candle, this candle, this candle plus this candle, the one that were formed above. So after this was broken, we can see the market came back again. So the market came back again, and we can see here there is this bullish order block here. This one, the last red candle before the market pushed up. That one is an order block. So I'm going to mark it like that. All right. So the market here came, still made a consolidation within this bullish order block. Of course, we can say these are fake breakout. The market started going up there. All right. And it is still going. If I switch to 1 hour time frame like this, we are going to see something interesting, something that we cannot see on a higher time frame. So on a, if I remove all the drawing, you will come to understand that there is something amazing. Okay, there is something amazing, something we are unable to see. So here, the first setup is this one, the head and shoulder. All right, the left shoulder, the market went up. So this setup to me is showing me that the trend now has changed. All right. And if we mark this one, it is going to seem like a structure, but it is a head and shoulder. The left shoulder, the head, the right shoulder pushed the market, went up. And the right shoulder also is the one that pushed the market by using that bullish order block there. Please follow me. So I'm going to use black, right? Black like that. So the market pushed, broke above that structure, went up, created a consolidation. So here, there is the break of structure, and the market is expected to continue pushing up right there. If I go on a 15-minute time frame, we are going to see something different, okay? Because it is something that we cannot see on a higher time frame. So my entries were based on a 15-minute time frame. All right. On a 5-minute time frame, you still see that Boom 500 is trying to spike. All right. It's trying to spike, and it is still trying to do so. Okay. If I try to take you back on my chart, which is my MT5 here, this is what we are looking at right now. And my entry points were on point and accurate. And that is what made me to enter this trade. So thank you guys. I'm going to see you in the next video. For now, bye-bye.